Hello, traders. Gary Wagner here. It is 11:20 in Honolulu, 4:20 in New York on Wednesday, 18th day of January, 2023, and this is the Daily Report for gold and silver. Now, for the second day in a row, both gold and silver prices have declined. Today, there were multiple Fed officials that came out recommending that they do not slow down their pace of rate hikes. And in fact, James Bullard said he is in favor of front loading, taking whatever steps are necessary to hit their target of 5 to 5.5% as quickly as possible. Gold, basis most active February contract, is currently trading down by $3.60. It is fixed at $1,906, or a decline of 0.19%. Silver has seen a decline today of 2%, 48 cents, with the most active March contract currently fixed at $23.59, and all of that with no input from the U.S. dollar. The dollar is in essence unchanged. It's fractionally higher, 0.04%, and the index is fixed at 102.185. As I said in our opening price board, we are now in our second day of price declines, beginning yesterday after hitting a high of $1,931. Today, we did close fractionally lower, off by about $3.50. Noteworthy was the fact that we had a lower high, lower low, and lower close all in the same day. What we have noticed in gold is that as it has been going through this rally, for the most part, we've not seen any real correction except for the move from these lows at 1620 up to this high of around 1800 and a 23% retracement to 1720 right here. Other than that, we have not seen anything except pauses, but definitely not corrections. And so we're trying to determine if, in fact, that's what we'll witness here is some sort of a correction. And if that's the case, where would that correction conclude? What's a logical place to look for support? And to that end, we have pulled up a shorter-term 480-minute candlestick chart with a fib retracement beginning at 1719, the conclusion of the correction we just spoke about, up to the high that we saw yesterday. And the first level that we want to look at is around $1,880. 1881 corresponds to a fib retracement of 0.236%. We can also see that as this market went up, we do have an entire band in which we saw prices consolidate right in here and trade between a very narrow range and then break out again to the upside. So this would be a logical point, which is why if we see a further price decline where we'll put in a trade alert to recommend entering a long position in February gold at about $1,885 and placing our stop below the bottom of this support. I've converted the short-term candlestick chart to a Henkinashi or Japanese average chart, and we can definitely detect that in terms of the strength of the trend just a few days ago, body size greatly reducing, a return or a pivot to red candles, and now small-bodied green candles. Don't have enough information to answer whether we're seeing a consolidation or the beginning of a correction. Lastly, we are looking at a daily Japanese average or Henkinashi chart, and what we can derive from this longer-term chart is that we have definitely reduced the power of that uptrend. Obviously, with the market actually trading lower over 2 days, we are getting the first sign of a pivotal candle, a small-bodied green candle with lower and upper wicks. And again, we believe that we need a little bit more information to determine if this market will correct or simply consolidate at current pricing. I continue to be extremely bullish interim and long term. It's simply the question of short term, because at any moment we could see a price correction before returning to the next leg of a rally. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.